Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
China's aluminium imports more than doubled year-on-year in May, customs data showed on Tuesday, but failed to hit an expected decade high after a rare pricing phenomenon made it cheaper for domestic buyers to source metal from overseas. Arrivals of unwrought aluminium imports and aluminium products into China, by far the world's biggest producer of the metal, stood at 119,145 tons last month, the General Administration of Customs said. That was up 12.3% from April and up 164.8% from May 2019, Customs said, but was short of the more than 6-year high of 121,025 tons seen in March.
Moving on to the top news in the energy sector.
China will press the brakes on crude imports in the third quarter, after record purchases in recent months, as higher oil prices hurt demand and refiners worry about a second virus outbreak, analysts and trade sources said. China imported a record 11.3 million barrels per day (BPD) of crude in May, with volumes set to rise in June and July, as cheap crude purchased during an oil price slump in April arrives in the country. But the world's top crude importer is expected to receive around 0.8 to 1.3 million barrels of oil per day less crude from abroad in August and September than it did in May, analysts forecast.
Global natural gas output is set to fall by 2.6% this year because of the impact of the COVID-19 pandemic, after previously being expected to grow, consultancy Rystad Energy said on Tuesday. Rystad Energy had expected total natural gas production to rise to 4,233 billion cubic meters (BCM) in 2020 from 4,069 BCM last year. Now it expects production to be 3,962 BCM for this year, rising to 4,015 BCM in 2021 and to 4,094 BCM in 2022.
We will now look at the top news in the agricultural sector.
China has approved the import of 2 new genetically modified (GM) soybean varieties, including one developed by local firm Beijing Dabainong Technology Group Co. Limited, its agriculture ministry said on Tuesday, making it the first Chinese-engineered soybean allowed for import. Dabainong signed an agreement with Argentinian biotechnology company Bioceres SA in 2013 to help it get regulatory approval for production of its DBNO9U4-6 glyphosate and glufosinate-resistant soybean in Argentina. With approval from China, the world's top soybean buyer, the seed can now be marketed for production in Argentina.
Next we have agricultural price moves.
Chicago corn fell for a second straight session on Tuesday to its lowest in nearly 3 weeks after U.S. Department of Agriculture (USDA) data unexpectedly showed an improvement in U.S. corn crop conditions. Wheat dropped, falling for a 5th session out of the last 6, as improving prospects for Northern Hemisphere harvests again weighed on prices. Soybeans also eased, despite a decline in the USDA's weekly crop rating for the oilseed, as the weather outlook in the U.S. Midwest remained broadly favorable for soy and corn crops after a recent dry spell. The most active corn contract on the Chicago Board of Trade was down 1.0% at $3.25 a bushel at 11:24 GMT, after earlier dropping to its weakest since June 3. CBOT soybeans fell 0.3% to $8.73 minus 1/2 a bushel. CBOT wheat shed 0.5% to $4.87 a bushel.
We will now take a look at energy price moves.
Oil prices rose on Tuesday in a volatile session after U.S. President Donald Trump soothed jangled nerves over the status of the U.S.-China trade deal. Markets were unsettled by surprise comments from White House trade advisor Peter Navarro, who said the hard-won deal was over. Brent crude rose 27 cents, or 0.6%, to $43.35 a barrel by 14:13 GMT, having skidded to a session low of $42.21. US oil was up 28 cents, or 0.7%, at $41.01, after touching a low of $39.76.
Moving on to metal price moves.
Copper prices rose on Tuesday after U.S. President Donald Trump said a trade deal with China was fully intact, and stronger than expected European data bolstered hopes of a rapid economic recovery. Benchmark copper on the London Metal Exchange was up 0.5% at $5,909 a ton in official trading, nearing a 5-month high of $5,928 reached earlier in June.
Finally, we have the most recent news on the financial market.
The euro jumped to one-week high following positive economic data on Tuesday, while other currencies also rose after White House trade advisor Peter Navarro walked back on his comment that the U.S. trade deal with China was over. The euro was bolstered by French business activity rebounding more than expected in June, returning to growth after 3 months of an unprecedented downturn, as well as data showing the eurozone downturn eased again this month. The euro rose 0.6% to $1.1325, its highest level since June 16.
Gold prices surged to their highest since October 2012 on Tuesday, driven by weakness in the US dollar and widespread monetary stimulus packages by central banks as a jump in coronavirus cases dents the economic outlook. Spot gold climbed 0.6% to $1,765.56 per ounce at 14:59 GMT, having hit $1,768.96, its highest since October 2012. U.S. gold futures were up 0.9% to $1,783.10 per ounce. Gold has gained nearly 16% this year, supported by global stimulus measures, since the non-yielding metal is considered a hedge against inflation and currency debasement. The dollar was down 0.6% at 96.46 against a basket of currencies, making gold cheaper for non-US currency holders. That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more updates. You can also follow us on Twitter at TradeFlow TV1, which allows you to watch our program on your mobile device or desktop.